After our last month's SMSF update video, further information has been provided by Treasury about the proposed changes for members with superannuation balances in excess of $3 million. As always, we need to understand that at this stage, these are still merely proposals. They have yet to be included in any budget measures. They certainly haven't been legislated, let alone passed through both houses of Parliament and received royal assent. Furthermore, under the terms of the proposals, the first and most important date is the 30th of June 2026, at which point member balances will be measured for the purposes of determining any subsequent actions required. As we already know, the current tax impacts on taxable income earned by superannuation funds will not change, even though the original press release presented matters in a slightly different light. The proposal is that the additional tax will be levied on the member personally and not their fund, but the member will be allowed to take money out of the fund to pay the additional tax. The important thing to note is that under the terms of the proposals, the concept of earnings has a special definition, unrelated to the level of taxable income earned by the fund and which includes unrealised capital gains. The SMSF Association has recently commented that they appreciate the attraction of using the total superannuation balance as a measurement approach by the ATO, but the fact remains that there are various items included in a member's TSB which, for reasons of fairness and equity and to avoid unintended consequences, should not be subject to the new tax. And on top of this list is the unrealised capital gains. To quote the SMSF Association, "We caution against setting what is a dangerous and concerning precedent. Positioning in this manner is counter to vertical and horizontal equity taxation principles. When we consider the various distortions that arise and exceptions that will need to be addressed, the outcome is far from simple or equitable." Having said that, it's also interesting to see that the Treasury paper seeking feedback may also consider alternative methods of calculating earnings on balances above $3 million. In our previous video, we made mention of a number of potential unintended consequences of the proposals, which at the time had not been considered by Treasury. As an example, the SMSF Association has established a specialist committee to look at a range of issues associated with the proposals for the purposes of providing feedback to better inform Treasury as to the issues that need to be considered if the legislative changes are to be appropriately targeted and to provide the appropriate level of certainty to superannuation members and their advisors. As an additional issue, the administration of the additional tax will require material additional resources to be provided by the ATO in order to provide the initial determination of earnings and to deal with the administration of the payment of the tax. In this respect, the proposed system is analogous to what is currently incurred in respect of Div 293 taxation. All of those who have experienced this particular measure in the past will appreciate the additional timeframes needed and required to deal with the issue. It also raises in my mind as to whether the additional tax collected will exceed the cost of collection, but this is not an issue that is apparent from any of the proposal discussions and/or documentation. As always, the elephant in the room is any proposed methodology for dealing with large notional balances for capped defined benefit income streams. We understand from comments made recently, the government is grappling with how to value these pensions and calculated earnings for the purposes of the proposed tax. But similar issues already apply to SMSFs with lifetime and life expectancy pensions, so we anticipate a resolution to this particular query. As the consultation period nears its close, we hope to have further and better particulars available to us from Treasury with the intention that any further announcements provide a greater degree of clarity as to the execution of the proposals. As always, we wait with bated breath.